Alright, welcome everyone to a Chart Focus 1 live stream. Thank you all for waiting. Before we start, hopefully you guys have been doing well. I know the markets have been very hard to traverse, right? Things have been not so easy with the chop and trends not following through or continuing the very next day. And things are getting very volatile, right? But on the positive side, okay, I said this last night as well. Even if we're having these volatile and very big fake outs, right, with no continuation of a specific trend, the price ranges are getting very, very tight. So, like I said, I think at some point here in the next few months or few weeks, maybe even, the markets are looking ready to really start consolidating here and forming a nice price range. Okay, so in order for us to really see some good consolidation, we need to start really forming and adhering to specific price levels. And I think right now we're trying to do that right now, right? The market is trying to figure out where we can start consolidating so that we can start forming an accumulation phase. Right now we're in a downtrend phase, and right now we're or a distribution phase. And in order to kind of reverse that phase, we need to start accumulating, right? So we have this accumulation phase that we need to go through in order to actually start reversing in the overall markets. And obviously, I'm not gonna tell you guys when I think the accumulation phase is gonna happen. I mean, no one really knows. So hopefully, we can see some type of some confidence in the markets to finally stop being so choppy and volatile and start actually range trading between two different levels, right? To start forming an accumulation base, right? Okay, so let's take a look at SPY. So SPY futures right now, all right, it is very, very quiet. All right, it was quiet yesterday night as well, and it's very quiet currently. Obviously, we're gonna get a little bit more volume injection once the Asian markets and European markets opened as usual. And if you guys are wondering why I always say that, well, you know, futures market, right? Think about it. Futures market is an overnight market, and why do you think an overnight market even exists? Because there are international markets that are opening and are open, right? And so futures is actually pricing in the movement from international other markets, right? Global markets to price in what's going on. And that's the reason why you sometimes see, futures, SPY futures getting affected by, let's say, European. Oh, it's hard to hear you over the music. Oh, my bad, my bad. Okay, how's that now? My bad. I guess I didn't do my default. I did not do my default audio capture here. Oops. My apologies, everyone. Can everyone hear me now? Hopefully, you guys should be able to hear me. Give me a thumbs up, guys. Oh, okay, perfect. All right, sorry guys about that. So, what was I saying here? Yeah. So, like I said, the futures market is, it's affected by global international markets that are open when the U.S. main equity markets are closed. That's the reason why I always say I'm waiting for the Asian and European markets to open, because that's when futures markets usually get a little bit more of a volume injection throughout the night, right? Obviously, any overnight catalyst or news that comes out in the U.S. that are considering U.S. markets, right, and are correlated to U.S. markets will affect futures. But anything that happens drastically in the overall overnight market, right, it will affect SPY futures as well. Okay, so that's a little tiny info there for you all. Hey, Joe, what's up? Minor, what's up? And Commander Sparky, thank you for telling me that. I appreciate that. I completely forgot to do my default audio capture there. You guys should be able to clearly hear my voice now. Okay, so we're gonna look at the first list of tickers here by Minor Perez. Thank you so much. Let's take a look at AMC. Okay. So everyone, stick around. I'm gonna go over all these tickers that you guys sending me here. So right now, if you guys have any tickers that you want me to go over, please send it in the chat. I'm also going to look at Instagram for the people who have DM'd me as well. But if there's an overlapping of two tickers, I'm just gonna go over it once. Okay. But once I'm done with that, I'm gonna go extensively over the market levels that I want you guys to be looking at for tomorrow, and I'm going to talk about something that's a little bit interesting about fiat currency. Okay, fiat. All right, so AMC, right? So AMC, I actually was stopped out of my 15 strike calls that expire on 7/15, right, July 15th, and I unfortunately didn't get back in, but I am not going to go back in yet. And here's the reason why I didn't go back in today, because, well, this was a nice move, right? It was a great bounce. We bounced off of the 10 SMA, we bounced off of the 21 SMA. That's great. And the 10 SMA is starting to curl upward and is starting to cross above the 21 SMA. And when a smaller SMA crosses above a bigger SMA, that's a bullish indication, right? Now, the number one reason why I did not get in when it broke this previous level of resistance again at 13.20 is that, well, the volume is too low. We have even lower volume compared to yesterday, right? When we pull back, okay? So I did not like to see this because I want to see bigger volume than the previous pullback candlestick if I want to see continuation. And we started forming lower highs, right? Whenever I see lower highs on a bullish trend, okay, on a potential bullish trend, I immediately get suspicious, right? I get suspicious and I tell myself, the bulls here are not too strong here, right? But I'm gonna give the benefit of the doubt here to the bulls because AMC is a meme stock, right? And so retail traders love to pump this name up, right? When they start piling into calls and buying the crap out of shares of AMC, right? So I would say that it's still coiling. Okay, technically it still looks very, very good. It's still within this ascending triangle chart pattern, right? And we still haven't broken out that 14.50-ish resistance level that we rejected in the past 2 days here, right? So if I see a good movement upwards above $14 tomorrow, I might get in again with those $15 strike calls that expire on July 15th, or maybe I might even move up to $16 strike calls because, like I said, $16 is my ultimate price target and my first profit target as well if I do get in them again. Okay, but I did take a nice chunk of profits thanks to this run up, and then the very next day I decided to take a little bit, I took everything off at this little tiny morning run up. Okay. So that's it for AMC, and then right now I'm gonna do SPY at the end, QQQ at the end as well. Tesla. Okay, so Tesla, what a choppy day for Tesla, right? And every other big name, right? So if you guys didn't know, Amazon and Apple was really just pushing up the market today, right? It held on and helped the market stay above a lot of the intraday and daily support levels I was looking at. And Tesla was one of those names that didn't help with the overall support on the overall markets, right? So Tesla here, it broke below 700, right? And the weird thing about Tesla this morning was that I was looking at it pre-market as I was scanning through it in before the market opened, and Tesla, it was down. It was down when the overall markets were slightly up, right? Remember I told you guys last night on last night's live that I was going to expect a little tiny gap up. I think yeah, so we gapped up a little bit, right? And I was like, okay, that's exactly what I wanted anyways, right? But when I looked at Tesla, and since this was in the CFO Swing Watch newsletter for this week, I'm still monitoring it, right? So I was like, something's off here, because Tesla was actually a little down in the pre-market. And so I was like, that must be because of the fact that we closed slightly below the $700 level. And remember, the $700 whole number level is a very significant level. Okay, we bounced off of it multiple times, and we broke below it multiple times as well. So there is going to be a point where the price is either going to stay above 700 for quite some time, or it's going to break below 700 and stay below 700 for quite some time, right? So I don't know if today was that day where it's going to start staying below 700, but for now, Tesla is looking a bit bearish. Okay, but like I said, every single big tech name has been also starting to coil as well, getting tighter and tighter and tighter. So if from this bounce that we made today, if we start forming this ascending support trend line here, I'm gonna expect another tiny green day tomorrow, all right, on Tesla, so that we can start rejecting off of major levels of resistances again as we get tighter and tighter and tighter, and eventually we're going to have to break above and go away from 700, or we're gonna have to break below and stay below 700. Okay, so that is my basic kind of consensus for Tesla here, and I expect Tesla to just get tighter, and it's going to get choppier. All right, that's kind of the reality that we're facing here right now. You guys faced it today as well in the overall markets. So Tesla, I expect us to get choppier and choppier and choppier as we continue to get tighter and tighter with the price ranges. Okay, so NVIDIA is forming a pretty nasty head and shoulders chart pattern here. Okay, so if you look right here, okay, so So let me make that green so you guys can know that support. Let me actually take this out here. Oops. I accidentally deleted that. Okay, so with this head and shoulders, all right, if you guys don't see what I'm talking about, we have our left shoulders here, right? Left shoulder. Okay, and then we have our head. Oops. And then we are basically completing the formation of this right shoulder, right? So it's a very quirky looking head and shoulders here. And oh, I just noticed that you guys liked the video already. Wow. Thank you guys. I've only been live for like what, 15 to 18 minutes, I think. Thank you guys for the likes. Awesome. So in the video here, you know, it looks bearish, right? But here's the thing, okay? So we have Micron, okay? They're reporting tomorrow, I believe, after hours, I think. Yeah, tomorrow after hours. If I'm mistaken, well, I'll correct myself later. But depending on how Micron does, right, to see whether or not this, you know, supply constraints that the entire semiconductor industry has been facing so far is, you know, are they navigating through it? Like, are they actually being able to, you know, work around that supply constraint? And, you know, are they actually doing something about the increase in demand that they've been seeing since the past 2 years, right? And, you know, if MU states that, oh, you know, this is really unmanageable and inflation is killing us, then the whole semiconductor industry tomorrow is going to absolutely flush. Okay, so you guys have to watch out for that. That's like the main thing that everyone and their mother has been looking out for on the semiconductor industry, because you know you guys should know how important chips are in today's life, right? In today's society, right? It's in your smartphones, and it's in your laptops, and it's in electric cars now, right? And it's in a multitude of other applications that are crucial to running today's society, right? So if the providers of such a crucial technology is having a hard time managing inflation and supply constraints, that's a big warning sign, right? So, you know, obviously right now the entire semiconductor industry has been, you know, hit hard due to inflation and supply constraints and, you know, demand worries as well. So depending on how Micron does tomorrow, you know, we'll be able to see whether or not NVIDIA has a chance of trying to bounce again on this neckline of this head and shoulders. But for now, pretty bearish chart pattern here, and we've been rejecting off of the 10 and 21 multiple times here. So short-term trend is to the downside, and even then the long-term trend is to the downside, right? We were not able to revisit the 50 SMA to actually retest it, right? And we haven't even been able to get back above it. So long-term trend and short-term trend is to the downside, right? Definitively, I am looking at this as a downtrending name. Okay, so if we're able to hold 155.50ish tomorrow and bounce above it and start to fill in the gap that we made today and head back up to 160, okay, I would expect us sometime next week to head back towards that 168 to 168.50 level. Okay. All right. So, Mr. Sparky, Commander Sparky, XOM. Yeah. So, there has been a lot of naysayers when I told people that energy is looking weak and I think it's gonna go down more. Commander Sparky, I don't know if you've seen my analysis in the Discord, but I did a technical analysis on XLE last week, and I remained a little bit bearish as well 2 weeks ago. But you know, with XLE, since XLE and XLM look so similar to each other, I'm gonna go over XLE first. So XLE, this is the energy sector fund, right? It tracks the broader energy sector, and I said that whatever bounce that comes, right, is most likely going to be a part of making a bearish chart pattern, and we got the confirmation today, right? I said this last week, right? So you know, my analysis could have been completely negated by if we continue to move to the upside, but we didn't, right? So my analysis still stands corrected, right? So we've been in a harsh downtrend. We formed an evening star chart pattern right here, right? This is an evening star doji, and we formed a nice V top chart pattern. And whenever we have a V top chart pattern, we tend to move a lot lower in the next few coming weeks and months, right? So for XLE, people are saying that, oh, it's gonna bounce and we're gonna, continue to go to the upside because of the fact that we have demands in oil. But I think we're at this point in time now where all that hype and demand is kind of gone in the energy sector, and now we're starting to actually face the reality of the problems that we're facing with energy, right? We're having an energy crisis with oil and gas, right? Especially with the Russia-Ukrainian war, right? And all these sanctions that are going on with the West and Russia, and especially Russia, they're stopping exports to the EU, right? So that's a big problem. So I think the price is going to start pricing in, literally pricing in these really huge problems that the entire world is starting to face right now with energy. Okay, so hopefully, energy starts to reverse sometime in the colder months, right? Starting from, I would say, October to December, right? So, or if you guys like quarters, in the fourth quarter at least, I want to see energy to come back. But for now, I'm going to stay bearish until that time comes, and that's kind of the reality there. So XOM, okay, same thing, right? I'm expecting another move lower tomorrow. I mean, we rejected yesterday's high of the day, so that's already bearish, and we closed below the 10 SMA again, right? So as crude oil continues to go down, right, the price per barrel continues to go down. Energy will continue to go down as well, the entire energy sector. And for XOM here, we're also seeing a head and shoulders chart pattern here, right? We have our left shoulder. We have our, we have our head, and then we're starting to form, right, our right shoulder, right? It's a very weird, weird chart pattern here, but I mean, if you want some sort of chart confirmation, I would say this right here is a confirmation. I mean, the V-shaped top chart pattern alone is confirmation to the downside. But if you wanted more, this could be considered a head and shoulders chart pattern, right? And we have our neckline here. Okay, so for XOM, if we decide to break below 87 to 87.50 tomorrow, we're going to go back down and hit 85, and eventually we're going to hit $80. Okay, so that's what I'm looking at for XOM. And if you forgot Sparky, XLE, I'm looking for 64 as the pivot point in the near-term future. Okay, but for now, like I said, every single oil name and energy name is going to start forming bearish chart patterns, right? After seeing that big initial decline, right? As big money starts to flow out of energy names. Okay, so WMT, Walmart. Yeah, so Walmart is still looking pretty bearish to me. You could say that this is an accumulation phase that's starting to happen, but I would need more confirmation. So maybe around the next few weeks, like even the next few months, I will wait to see if we can start trading between 118 and 125-ish. Okay, that's kind of my range that I told you guys last time as well for WMT. But so far, if we decide to start range trading, since we just rejected off of that 125 level, well, we did right here both times, discount stick and discount stick here. I think we can come all the way back down to that 118 support level and bounce again. Okay, so just like everything else, the retail sector is not benefiting from inflation anymore. But General Mills, okay, their earnings was actually pretty good, and it absolutely flew. Okay, so if General Mills starts having some sort of a parallel effect on all the other retailers, right? I would think Walmart has a standing chance, since Walmart is one of those cheap, quote unquote cheap retailers that provide to millions and millions of families each year, right? Especially during times of inflation. I would think Walmart stands a chance against recession and inflation as well, and inflationary pressures, and especially the supply and demand crisis that's happening right now, right? You guys know about Target, right? Target has been absolutely decimated with oversupply. If you guys go to Target right now, right, you guys will notice that there's a lot of marked down products that you wouldn't have expected to be marked down. And the number one reason for that is that all the branch managers of Target and the entire corporation of Target is trying to sell off the oversupply that they have for every single product, right? They've ordered too much, right? Thinking that there's going to be a surge in demand. And well, that was true, right? But that was true last year, right? And the Fed kind of overlooked inflation. So everything's just coming back down, crashing hard, and we're hitting reality. Excuse me. So on WMT, we're forming a very, very large macro bearish chart pattern here. And specifically, the conventional bear flag, right? We have our huge fall here, led by Target and Walmart's earnings here, okay? And we have a flagpole right here, and we're slowly starting to confine within this range here and this trend line, right? We have our flag support at $118, and we're starting to see this descending resistance trend lines to form, right? So once we bounce again a third time on this $118 support level, I want us to bounce back above and retest that descending level of resistance one more time and reject off of it so that we can touch $118 again. And then that fourth touch will possibly be the breakout to the downside. Okay, like I said, the only risk to a bearish trader on Walmart will be that Walmart becomes a little bit more in demand by investors, especially to investors who are looking to put in more money into recession-proof stocks. Okay, that's like the only overhead risk that you really have if you want to short Walmart. Okay. Yeah, so Commander Sparky, this Walmart here, a great name to start looking for range trading, right? Like I said, once they come back down, okay, ideally this is what I want to see. Okay, so if you guys want a visual, okay, bounce, and then another retest at the descending level of resistance trend line, and then touch again, and eventually we break lower. Okay, so that's exactly what I want to see here. All right. Whoa, 7 likes. Thank you guys. That's awesome. Thank you all for liking the live here. Amazing, amazing. Okay, so that's it for the tickers there. That you guys have submitted on YouTube here. Let me look at Instagram. Okay. So, okay. So the next one that we have is Coinbase. Okay. So Coinbase. So I explained this last night. Coinbase. I got in a little bit too early on my short, so I got in right here on this day. I got stopped out the very next day. I kind of wanted to keep a larger stop, a wider stop, because I want to see a rejection. I knew that the price is eventually going to hit 68.50 again, but I wasn't expecting that market run up. And we passed the 60.50 and I had to get out, right? As I saw the price approaching that 60.50, and once I saw the price actually holding the $60 level, so I had to get out. And I did not revisit it again, which is in part my failure, but I was looking at other names, so that's not really a failure on my part. I was looking at a lot better setups than Coin here, since Coin is kind of volatile here, but the trade was there. Okay, I'm not afraid to admit that the trade was there. I could have gotten in, but I went in out for a loss. That's fine. I still respected where my stop was. Okay, that's the most important thing, guys. And once it broke below this descending, this ascending support trend line, which is what I was looking for, it's immediately started to break down. But like I said, Coin, I am not liking this low volume breakdown, right? So, it seems like the sell-off, right? The maximum volume spike for sellers have peaked right here, right? Because ever since then, the volume has been dying down, even when the price is starting to go down and we're seeing more selling pressure, right? So, I want us to kind of realize that volume is starting to get more important here as names are starting to kind of base off, right? Coin is starting to base off here, right? I mean, this is reality here, folks. We're starting to see some type of a lower volatile price action, and we're seeing lower and lower and lower volume as we continue to move downward. So at some point, we're going to start to bounce. And tomorrow, I wouldn't be surprised if we start seeing another green candlestick form to have a nice run up again, right? Because of how low volume this sell-off was, right? And this breakout. So it wasn't a very strong breakout, and we still have yet to revisit the 10 SMA again after this breakout to the downside. So who knows? Tomorrow we might just get that revisit to the 10 SMA if we see strong market movement to the upside. Okay, so that's it for a coin. Okay, next one here is A-firm. Oh, wow. Yeah, A-firm is A-firm is blasted. It's blasted to the downside. But A-firm here, like I said, with coin as well, it's starting to curve, right? And at some point we're gonna start basing. Okay, so A-firm here, like I said, buy now, pay later trend. The bubble has popped, right? It popped ever since we started to move to the downside, and we moved below the lows of the early IPO days as well. So, and we continue to move lower. So, the buy now, pay later is starting to see some really good bubble popping there, as people are not paying off, the interest payments, right, or the monthly installments that they've chosen to have when they start to buy products and merchandise that they can't afford, right? So people are literally defaulting on payment plans, if you can look at it that way, right? They're defaulting on payment plans by not paying them, right? And because they can't, right? So interest is piling on, if there is interest. I don't even know how buy now, pay later payment plans work, because I know I'm never gonna do that. I'm just gonna pay for what I need, right? So and if you're financially literate, you guys should know that you shouldn't be buying something that's out of your range, your price range. Okay, so, and especially at a time right now with inflation, you guys shouldn't be splurging on anything. And yet we still have people trying to buy stuff that are out of their price ranges, and they're using these buy now, pay later services like A-firm. Okay, so A-firm here, the trend is dead. People are shorting this thing down to the earth. And A-firm here, the only positive thing that I could possibly see is on the technicals here. We're starting to form a nice saucer base here. We're kind of curving downward, okay? And we have this descending level of resistance. I'm not gonna see much movement happening here until we actually start moving sideways at some point. So we have to start really find a nice solid level of support on a name like this. Okay, so hopefully the A-firm bulls are being hopeful here, but so far the bears have gotten control of this name and it's continuing to move to the downside. Okay, all right, so that is it for tonight, guys, for the names that you've given me. I will go over SPY now. Thank you guys for waiting. I know you guys have been waiting for quite some time. Okay, so SPY on the weekly time frame. So if you guys are in the CFS Swing Watch, you guys should know that I've been talking about SPY and the possible correlation on the weekly time frame between these candlesticks and our current candlesticks here, right? So, we had a nice big bounce, right? Okay, but it was a very low volume bounce, right? But with the low volume bounce, you know exactly what happened after that, right? We consolidated for 1 week and then we absolutely flushed the next week. And I think we're going to start seeing that as well again for this week. So we're going to possibly bounce again tomorrow, and possibly on Friday, we're going to end up with a small bearish candlestick, a red candlestick, and next week we might flush again, right? But the thing is, we're seeing such low volume this week, right? Even if we're going down, right? Just take a look at the weekly time frame volume here, right? Our volume, we're in the middle of the week, right? So if I want to see more strong sell-off, right, I want to see more volume, okay? But we're slowly seeing less and less and less selling volume, right? If you take a look at my volume bars and the average volume line here, right, we're starting to curl downward. Okay, so if I want to see stronger sell-offs happening, I want to see an increase in selling, right? Not a decrease in selling volume. I want to see an increase in selling volume, right? So with that, let's go to the daily time frame. So we held off this support level really well, this 378.50ish level. And when we came back down here, we immediately started to jump, right? So that means buyers are there. And we completely filled in the gap that we made last week on between Thursday and Friday, right? During the short week. So with this gap fill here, obviously it's bearish because, who made the gap here, right? Bulls, right? Buyers did by gapping the price up. So if sellers regain control within this gap and start filling in the gap, that means sellers are in control, right? So that's a little bit bearish. But, okay, the price is now coming back down and retesting this 10 SMA. And do you guys remember what I said about whenever price wants to start reversing higher, right? And when I look at a 10 SMA, there's at least three kind of rules that I go by, right? Number one rule is that when we want to start reversing, we retest the 10 SMA, right? So we start coming back up and we retest the 10 SMA. So that's what happened here, the first step, right? We retested, rejected, and we retested again, and we closed above it, right? And when we closed above it, we actually started moving up higher. So this is the second rule here, right? Second rule, where we came up and stayed above the 10 SMA and we closed above it. And the third is pulling back and coming back down to retest the 10 SMA as new support, right? And what I say new support, well, because the 10 SMA has been acting as a strong level of some sorts, but specifically a strong SMA as a level of resistance, right? The price has been rejecting off of the 10 and the 21 multiple times whenever it tried to retest it or go over it. But since we've had now two instances here, okay, two occasions, right, where we start to retest the 10 SMA, close above the 10 SMA, and it came back down to retest the 10 SMA, okay, it just tells me that the selling is starting to slow down, right? I mean, just on the volume alone, that already tells me that sellers are starting to kind of die off and the seller exhaustion is starting to appear, right? But just these two events alone tells me that there's a possibility that we can start seeing, like I said last night as well, some sort of a consolidation range starting to form, right? So it'll be nice. So if I take all these levels out, right? So let's get rid of all these levels. Okay. If I want to look at two specific levels, okay. So let me make this not red. Okay. What I want to be looking at right now is this. Okay. These two levels. Okay. Oops, let me make this green, not red. Okay. I want us to hold 363. So this is the line in the sand. Okay. This right here. Okay. Line in sand. All right. This right here, line in sand. Okay. This 363 level is the line in the sand. Right. We do not want to breach this level. And this level right here, 415.50, or if you just want to, obviously, 416. 416 is the whole number level, right? If you want to round up, Okay, that is the level that you guys want to be looking at for resistance. Right, and now why am I giving you guys these levels? Okay, why am I giving you guys these levels? Because if SPY starts to, range trade and starts to actually consolidate, I want the price to move up and down between these two price ranges for the next few months and for the rest of the year. Okay, so if I was wanting to see SPY starting to start an accumulation phase after this big downtrend in the overall markets from all-time highs, right? We're down about, I think, like 22 to 23% now. Which, by the way, guys, if you guys remember last week, do you guys remember the headlines saying that, oh my God, are we now out of the bear market? Do you guys remember that? Right? And what did I say to that? Those headlines and those rumors and all that chit chat on Twitter, right? I said they're freaking out their minds, right? We bounced at the 20% from all-time high downturn back in mid-May, right? And people were saying, oh, we're out of the bear market already, right? We just retested it, well, we just entered into the bear market, but we came right back out of it. So we're probably out of the bear market, right? And that's exactly what we said a couple weeks back, right? 2 weeks ago. Okay, or last week actually. So, I wouldn't be too quick to really trust what the headlines are saying or what other people are saying, and just trust what the chart is telling you, because it's already happened 2 times now, right? Where people are saying, oh, the bear market rally is here, and this bear market rally can help us reverse to the upside, and the bear market will be over since we're now above that 20% from all-time highs, right? The negative 20%. But that isn't the case, is it? Right? We now ended again below, in bear market territory, right? So, it's something that I highly want you guys to think about, right? Before you guys really start trusting the news too much, right? So SPY here, like I said, it'll be amazing if we start moving back up here to 416 and then coming back down, retesting 363, coming back up, and obviously starting to, tighten up the price, right? Sorry about that loop-de-loop. I was moving my mouse, right? So for SPY, this is kind of the big picture here, the bigger picture of what I want to see. We found some good support at 363. Why? Well, because in the past, that's where we bounced multiple times. One right here, second right here, and a third right here. Okay, there's a good area of support, right? So if we do revisit it again, I want to see a double bottom, right? Because that will be kind of the next bullish chart pattern that I will want to see if we don't get a consolidation phase or an accumulation phase. Oh, and obviously, if you guys are wondering why I'm thinking about the bottom, well, here's our first bottom, right? And I'll be waiting for that second bottom to come if it comes, right? Especially, obviously, I want to see the price hit 416 first. Okay. And then QQQ, kind of same thing. QQQ was actually very strong today. It kind of led the market to the upside, and it was actually helping hold up the markets. And obviously, the reason being is that Apple and Amazon, they're both big tech names, was helping the overall tech sector to stay up and the overall markets, right? Because since Apple is one of the number one heaviest name on SPY, so that explains that. It explains itself. So with QQQ, tomorrow, I want to see a breakout above 285, right? If you want to continue to the upside, we've held above the 10 SMA again now after retesting it, and we even retested the previous area of resistance around 281, right? How do I know resistance? Well, these two candlesticks right here, right? These two candlesticks, okay, where we weren't able to close exactly above 281, or we actually closed below 281 as well. So this previous level of resistance is now used as a new level of support, and it was also a previous area of support as well. How do I know this? Well, if you go back here, this candlestick used it as support multiple times, and this candlestick was in the general vicinity of this level right here, 281, right, and it bounced. Okay, so there's still some buyers here. How do we know that again? Based off of today's price action, right? When we came back down to retest this 281 level, we bounced. And when we bounce, who's creating or causing that bounce? buyers. Okay, so 280 to 285 is the tight price range that we've traded off and on again today with that chop. So I expect us to kind of break above 285 or at least reach 285 again, since we did close kind of near the highs of today, right? We didn't exactly close near the lows today, right? So I'm expecting some type of a bullish move higher tomorrow. So yeah, that's it for QQQ. Lastly, I want to go over ES again and see what ES is doing now. Okay, futures. All right, okay, yeah, it's not doing anything again. So futures still not doing anything. Let's look at NASDAQ futures. NASDAQ futures is still holding pretty strong. Percentage wise, I think, let's see. So NQ is at 0.37. Yeah, okay, so they're relatively the same percentage move down. So you know, NQ here, NASDAQ, I mean, pretty good volume in NASDAQ futures today with this bounce. So that's pretty nice. So if I was bullish, right, I am kind of biased on the bullish side. I would want to see a big push of volume once the European markets open. I believe Asian markets are open now, if I'm not mistaken. But once European markets start opening from 1 to 3 a.m. Eastern Standard Time, okay? Wait, I think I said that wrong. I think that's Pacific Standard Time. I don't really remember. Like I said, guys, I don't look at the international markets too much. I only look at it as a reference to our own U.S. futures markets. So apologies about that if I don't have that down. But like I said, personally, I don't care about the time zones. With NQ and ES, I'm gonna continue to monitor it tonight. I will post some charts for tonight in Discord as well. But with that, guys, good luck trading tomorrow. You know, right now, if you guys are observing, okay, I told Commander Sparky this when I was talking to him today, that when you're observing, right, when you're actually observing and you're kind of stepping back from the market and chilling, right, you're just chilling with the markets, right? You don't want to put in money of your own money to risk on any trades because the market's too choppy or too volatile. Completely understandable, right? And you're just observing, right? You're just observing, learning on the way, right? As the price continues to move up and down, and you're starting to really get comfortable with the price action, okay? As you're doing that, though, okay, this is what I told Commander Sparky here. You should never get FOMO, okay? Don't get FOMO. When you're observing, you're going to see multiple trades that you could have taken. But what is the number one reason why you've started to not trade and just start observing? Because you didn't want to trade, right? You want to kind of relax, right? And step back a little bit, right? You don't want to lose any more money, or you just want to kind of clear your brain so that you can have a better stance and a better mental state when you come back into the market, right? So when you're observing, just sit back and watch. Don't get FOMO. You don't need to get FOMO because you're not trading just yet. You're not trading just yet. I'm gonna really impale that into your brains. You're not trading just yet. You're observing. There's no reason for you guys to get FOMO, right? Fear of missing out. No way, right? You guys should not be getting FOMO. Just watch and chill out. You're not trading, okay? So, that's exactly what you guys should be doing, not trading, all right? So you guys shouldn't have thoughts about trading if you're really just trying to observe and understand what the markets are doing, okay? So make sure you guys remember that, right? Especially for the people who have a destined week or destined time of rest in the markets. And if you just want to watch, then watch. Right, the market will always be here to give you opportunities. The market won't be here if the world ends. Okay, and every living human being dies. Okay, so with that, let me go on to my final topic of tonight, and I'm approaching that hour of the live stream. So I'll speak a little bit faster, and thank you guys for really staying here with me through this entire live stream. Thank you guys so much. Hope hopefully you guys are able to hear the music and just chilling. All right, so hopefully everyone is having a great night so far, and hopefully you guys are prepared tomorrow if you guys are trying to trade, especially the overall markets. SPY trades, or QQQ trades, or even TQQ, SQQQ, whatever it may be, whatever ETF or whatever name that tracks the broader markets. If you're trying to trade those, make sure you guys are looking at clear, distinct daily levels first, and then going to the intraday levels. Okay, that really changes the game, guys. Okay, so hopefully you guys are managing risk. That's the most important thing. Okay, and having a game plan, right? Preparing. Oh, thank you for all this. Of course. Hey, of course, man. Okay, so the last topic here is fiat currency, right? That's a currency that we have now. Okay, and something kind of popped into my head today, right? And I've been seeing a lot of people online saying, why can't companies, why can't, people just mark down prices, right? Why can't we just push prices to where they were before we had, 8%, 9% inflation rates, right? Before, when it was below that 2% Federal Reserve target, right? So why can't we just do that? Why can't we just artificially push the price lower? Okay, so it kind of makes sense, right? Because with fiat currency, when we kind of went away and when we completely detached ourselves and completely moved away from the gold standard, right? When we didn't have the US dollar pegged, right? Pegged to the gold, actual bars of gold, the bullion, right? That's when that was the birth of fiat currency, where people and governments can just print money, right? We can actually just print money without an overhead supply, because when the dollar was pegged to the gold, right? Gold supply is kind of a definite supply, right? It kind of moves up and down, but it's very constant, right? Which is the reason why we had a very good value on the US dollar, and that's the reason why the entire modern nation that was operating basically in the past, back in the 30s, 1940s, they were all dependent on the US dollar, right? They had foreign currency reserves as the US dollar, and the US dollar was deemed as the most powerful currency, right? So, Command Sparky, much love, thank you. Of course, you're welcome, guys. You're welcome. So, hey, hello. Looks like my significant other is here for the live. Say hello to my woman, everyone. She just said hello. So, when the fiat currency, the US dollar, depegged from the gold, right, from the gold standard, so we don't have that overhead supply anymore of gold, right? Since gold has somewhat of a constant, definite supply, right? That supply doesn't change much, right? Which means we can have a very sensible value to the US dollar, right? So once we removed ourselves from that, countries start to really just, print money, right, with their own currencies and in the US dollar, right? Especially in the US. So, that's what the Federal Reserve has been doing ever since COVID started. And obviously, they stopped now, right? And that's what we called QE, or quantitative easing. And this printing of money completely devalued the US dollar the past 2 years. We've been seeing a complete crash in the value of the US dollar, and obviously the consumer sentiment, as inflation skyrocketed and prices started to really go crazy, right? Especially gas prices. So it's a matter of demand and supply as well, but with the Fed kind of screwing everyone over with the quantitative easing, that should have stopped a year ago, but obviously that didn't happen. But we just can't just simply tell ourselves, let's just push the price lower, right? That's not going to help the value of the US dollar. That's not pegged to anything, right? So obviously, I don't think the U.S. dollar is going to be repegging itself to the gold standard again. But we just can't really say, hey, why don't we just push the prices lower on everything, right? On commodities and everything, right? It's not how it works, right? So that's kind of one of the things I want to bring up tonight. That with high prices like this, um, you just can't forcibly lower the prices of things and prices of goods and products, so that the U.S. dollar just magically becomes valuable again. All right. And that's kind of one main reasons why the Chinese yuan has been gaining a lot more value recently. Okay, they've been making some moves here with their currency, the yuan. Okay, and they even have their own digital currency, which is the reason why they've actually banned Bitcoin. Right, they've been banning cryptocurrencies in the country because they've been making their own digital yuan currency. Right, they have their own Bitcoin essentially. Right, they have their own main cryptocurrency, and it's state backed. It's a government backed cryptocurrency basically, right? And countries like Saudi Arabia has been looking to switching from the U.S. dollar to yuan. That's a huge alarm, right? That's a cautionary warning to the U.S. dollar. So if the Chinese yuan starts to be to be adapted as the world's currency, right? Especially the foreign currency reserves for most countries, that's going to be a very, very bad sign of the US dollar. And that's obviously going to be the fall of the US dollar. And there's going to be some radical financial changes in the world. And obviously, there's going to be a huge shift in currency power from the US to China. And you guys obviously know why that's a bad idea, right? You guys have seen my Chinese video that I've posted, my Chinese theory on what's going on in China. If you guys haven't, make sure you guys take a look. It's 2 previous videos in my channel, so go ahead and take a look at that. But like I said, guys, the US dollar needs to gain some value, and that's what the Fed is trying to do. They're trying to lower inflation first, right, so that the intrinsic value of the US dollar, I don't really, you can't really say that's an interesting value, but I'm going to say it like that. But the intrinsic value of the US dollar kind of starts appreciating again, right? And consumer sentiment is brought to a more confident levels, right? So that the purchasing power of each and individual consumer is brought back to a good and comfortable confidence level, right? And a good sentiment. So hopefully the Fed is doing whatever they can so far. Like I said, I don't care if the Federal Reserve induces a recession. I just want to see the U.S. dollar gaining back its value. Okay, so and one more thing, guys, to add on to that, right now DXY, right, the U.S. dollar currency index here, you guys see how how much in value it has gotten, right? It just shot up. Okay, so the US dollar is very strong against other currency pairs, but don't be fooled by this currency value appreciation that you see for the US dollar. Okay, do not be, right? Because I obviously don't think that the US dollar is going to see any type of appreciation in value anytime soon. And right now we're just seeing that type of artificial inflation of the US dollar. Okay, so hopefully though, we start to see that type of confidence coming back in the consumers, okay, with the US dollar, so that we don't have some type of a huge currency shift and currency power shift from the US dollar to the Chinese yuan. Okay, so that's kind of what I want to tell you guys of the fiat currency and what's going on. And what I think about it, and about the gold standard, and in the past, and etc. So hopefully you guys thought that was kind of thought-provoking. Yeah, but it would be interesting if the government suddenly decided to say, hey, we're gonna peg the US dollar onto gold again, right? And that would be crazy, right? Because that means gold is going to start having random variable prices that countries set for themselves that other countries might want to buy from them, right? And the countries can set up gold prices, arbitrary gold prices, and if that starts happening again, that's gonna be crazy, right? But obviously, the U.S. dollar will be a little bit more less quote unquote volatile in their value. But yeah, guys, that's it for tonight. If you guys want to go into more on how the fiat currency was born and kind of the history on what's been going on with the US dollar being pegged to the gold standard, go ahead and do your research on it. I have yet to do more research on it, but I do have a good general understanding of what's going on. But so far, I would say, like I said, if you guys want to see a correlation between the DXY and SPY, well, the DXY has been going straight up ever since SPY has been going down. So if the DXY starts to move lower, then SPY is most likely going to start going higher. Okay, so they have kind of an inverse relationship, right, with the equity markets and the US dollar. All right, that is it for tonight. Thank you all for joining me. I'm passing that 1 hour mark here, 1 hour and 3 minutes to be exact. If you guys aren't subscribed yet, make sure you guys subscribe. If you guys haven't hit that notification bell so you guys know that I am live, make sure you guys do, so that you guys get notifications on the YouTube app or on your emails, since it will send email notification when I am live if you have that notification bell on. Okay, so make sure you guys watch my previous videos on China as well, and on the 4 reasons why I think the stock market is going to crash. And I made that back in, I think, in March, right? And so the market has been crashing ever since. So and even if the market doesn't crash, right, I think it's still a very thought-provoking video that you guys should watch. And I think I give you guys extensive research on those specific reasons and how they correlate with each other, and what the solution is as well, to those 4 specific problems that I outlined about the market. Okay, so make sure you guys take a look at that video. But with that, good night, everyone. I will do another live tomorrow at the same time, 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Have a great rest of your night, and I'll see you guys all tomorrow. Good luck trading.